Hello and welcome to the day ahead. It is Monday, May 9th. I'm Andrew Gagan. Let's get to the market moves. Another down day for Wall Street on Friday, with the Nasdaq and S&P both recording their longest losing streaks in a decade. Trade was volatile on the day, though. For the week, the Dow, the least hit, down around 0.25% on the 5-day numbers. On the sectors, the utilities index was higher and the economically sensitive Dow Jones Transport also rising. Oil and natural gas up 5% and 11% respectively, the big winners there, with tech and consumer discretionary leading the lag. On the Treasury markets, yields continue to surge as investors fret over the ability of the Fed to curb inflation in the years ahead, despite fresh data showing decelerating wage growth in April. The benchmark 10-year note up to 3.12%, a rate seen last in November 2018. And on the Fed, markets are now pricing in a roughly 75% chance of a 75 basis point interest rate hike at next month's policy meeting. This despite Fed Chair Jerome Powell saying the central bank was not considering such a move. All around the globe, more market mayhem. The Pan-European Stock 600 index sliding some 2%, with regional shares chalking up their worst week in 2 months. And the MSCI's gauge of global equity performance shedding nearly 1%. With the emerging market stocks whacked, they're down over 2.5%. Looking at the macro picture and kicking things off stateside, non-farm payrolls jobs rising to 428,000 for April, above the 391,000 expected. The jobless rate unchanged at 3.6%, average weekly earnings rising 0.3%, while consumer credit for March saw its biggest jump in 11 years. Major currencies were mixed against the US dollar. The Aussie dollar has continued its recent slide, falling from 71.3 US cents, currently sitting at 70.5. The crypto market has suffered over the weekend. Bitcoin falling below 34,000. It's since come back just a little, having halved in value since its highs of last November. The broader market also falling as investors reduce their exposure to risk assets as those bond yields rise. Well, for the week ahead, all eyes on inflation, with consumer producer and trade price data released in the US, plus Chinese international trade and inflation figures closely watched as Beijing confirms its COVID zero policy. So locally, negative investor sentiment looks set to continue following Friday's steep losses, with SPI futures currently down 0.7%. Commodities remain in focus, with impending European Union sanctions on Russian oil imports having pushed oil prices higher. Brent crude up 1.3% to $112 a barrel. Iron ore futures have tumbled more than 4.5% to $138 a tonne after the Chinese Politburo reaffirmed its current COVID strategy, suggesting harsh lockdowns will continue in the country. And base metal prices weaker, zinc extending its losses to be down almost 9% over the past week. And gold futures up 0.4% to $1,882 an ounce. Well, on the corporate front, eyes will be on investor reaction to Westpac's results. Cash earnings sliding 12% in the first half as competition bites, with half-year net interest margin at 1.91%. The bank's half-yearly revenue at $10.2 billion, down from the $10.7 the previous period, and investors receiving a 61-cent interim dividend. Looking ahead, the lender sees consumer spending tempered by higher prices and interest rates, with a moderation in house prices expected next year. And just quickly on the week ahead locally, it's all about consumer and business confidence, with ANZ and NAB sentiment surveys released on Tuesday, followed by Westpac and Melbourne Institute's monthly read on Wednesday. Dwelling approvals and new home sales also hit the tape to the end of the week, alongside a panel discussion with the recently appointed RBA Deputy Governor Michelle Bullock on Friday. And that is your day ahead. See you again tomorrow.